following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Option Block, and I hope all of our listeners out there are surviving this bloodletting that we're seeing on the street today, and hopefully you took some of our advice in recent shows and over the past few months that to take advantage of some of the lower volatility levels in the downside to pick up some protection for your portfolio. Either that or you are trading volatility and you are getting long vol here and you're benefiting from all this explosion in vol. Hopefully our listeners out there are the nuanced bunch, and you guys are the ones who are profiting from all this. Of course, my name is Mark Longo from theoptionsinsider.com. As you can imagine, we have a bit of a fractured roundtable today because so many of our usual suspects are just deluged with customer questions and complaints, and a lot of hand-holding going on a day like today as people call up saying, what's happening to my account? Why do I have a margin call? Why are my downside puts doing X, Y, or Z? And so a lot of hand-holding going on today, so we'll have a bit of a fractured roundtable, but nonetheless an interesting show. And since it is a different format today, we're not going to do all the segments. We're going to dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. And to kick things off, I am joined by none other than the man from the mountains himself, good old Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, give us a quick overview of what you were watching and what kept you busy today. Obviously, metals very active to the upside, probably the only thing that was green today on the screen. So I imagine you were watching those a little bit?
Yeah, this was definitely a busy day. And in terms of like what we were watching with the metals, I just left the hedge on with gold and silver, and I'm just going to let it go. I mean, I'm not standing in the way of something like this. I'm more than happy to pay the protective put premium in a market like this if the underlying is going to be performing this cooperatively in the metal side of it. And then on the equity side of it, well, thank God for put options.
Yeah, these I would think would be these are banner days for you guys over at Know Your Options, I would think, because this is pretty much your MO. This is why you guys exist. It is to shield the unwashed masses from the ravaging teeth of the bear on days like today.
Well, it is, and it's obviously we don't hedge 100% of all portfolios, but different people are going to be hedged at different levels, and on days like today, a vast majority of the assets that we do manage are hedged typically. We have some individual stock positions, but they're typically smaller just because of the fact that you shouldn't hedge everything. Otherwise, you might as well just not play the game at all.
There's no point on diving into that point if you're going to hedge everything.
And there is. So, I mean, but when you have larger nest eggs and you have put options on days like today, it definitely makes it a lot more relaxing than the guys down the street, I imagine, whoever the guys may be.
Speaking of put options, I'm guessing you're glad you rolled up that 325 put in Apple right about now.
Oh, definitely. Much happier to be in the 375 than the 325. That's for sure.
Yeah, Apple, another one, just crushed right now, down about 20 handles today, or about 5.5%, along with the broad market. And I guess that kind of brings up the question. I touched on this in some previous shows. I believe Auntie Mike discussed this as well, and we talked about what would happen if the downgrade did indeed happen, and would that really... Is this a bit overdone now, you think, in your estimation? I mean, you have names like, SIBO, which you think would fare fairly well in this type of environment, doing record volumes across the board, yet they're crushed about 5% along with everyone else. It seems like they're throwing the baby out with the bathwater in a lot of these names.
Well, I mean, the short-term trader in me, the instinct in me wants to buy this market right now, but I'd want to see at least some green on the screen before I did it. So the short-term trader blood in me is thinking that right now. But I mean, we're in uncharted waters right now. In the time that we've had these ratings, we've never had a downgrade in the U.S. debt. And then what else can the Fed say right now that can help us is my question. Just because you're not going to lower rates. I mean, what are they going to do? Start paying people to take out mortgages? I mean, that's the old solution of, well, it's lower rates, and then that should give the market a little boost. We really don't have that right now. So I don't know. I mean, at this stage, I am in a very protective mode, but I am still bullish over the long term on the U.S. and the U.S. stock market. But in times like this, you have to be protective of what you have.
Yes, a good time to be long some downside. It was funny. I was watching my screens throughout the day, and one of the names, and obviously towards the end of last week, I was looking at some of the positions we had on, and I was just looking where we had any downside and seeing what I wanted to do there, if I wanted to roll them or close them out. And one of the names we had some downside on that I closed out, some short downside, was MMI, Motorola. And ironically, that's been one of the names in the sea of red on both last Thursday and today, both days when the Dow was down more than 500 points. It was one of the few only green names aside from VIX and the metals. And today it finally closed down, but for a good portion of the day, Motorola seemed to buck the trend. I don't really know why.
You were in it. That must be why, huh?
It's because I closed out my short, so they knew that I was already out, so then it could mock me and stay up there. But I thought it was interesting that of all my screens I have running here and all the names to watch, that was the only one that really seemed to be putting up any sort of resistance. What about these VIX levels here, Uncle Mike? What are you thinking? We're heading north, south, east, west? What?
I want to remind everyone of a story. And this is actually, I'm going to have to depart the trading block on this story. Someone today told me that, well, we just had a client that was calling, he was actually flat. He was very happy to be flat on the day. He's like, well, when the VIX touches 45, doesn't it typically come back a lot of times? I was working for Options Express in the fall of 2008. It was September. The VIX was climbing to around the 40 level, I remember. And at that point in time, I was doing a presentation with Jim Bittman of the CBOE. We were doing a joint presentation, and people were saying, how do we short the VIX? What are the efficient ways of shorting the VIX? Now, we obviously weren't in positions to give recommendations of, yes, you should short the VIX or don't short the VIX, but they're saying, well, what about a put spread? What about shorting the futures? We almost missed our planes out of Vegas because we went through so many different scenarios, and the crowd was so intent on shorting the VIX. Well, obviously, we all know what happened. The VIX went up to, I believe it peaked out at 80 at some point, and I pray for all their pocketbooks that they didn't actually do that specific trade. So my message on the VIX right now is just because it's high doesn't mean it's not able to go higher.
Keep your powder dry, says Uncle Mike.
That's what I'm thinking right now.
Well, I'm glad you could join us today. We can hear the phone ringing off the hook in the background there. So go get your physical. Go calm your clients.
A lot going on. So thank you for the time.
No problem. And we'll see you on Thursday, sir.
Yes, sir. You have a great day, Mark.
And now we are also joined in the trading block by good old Mark Sebastian from OptionPit.com, the Seabass, a.k.a. the manager of the Mini Metals, a.k.a. the Greasy Meatball. Mr. Sebastian, what was going on with your clients today? Was your phone ringing off the hook, sir?
One of the things I always have my guys doing, even on their short trades, is to be long those units. So I got several emails from people being like, boy, my so-and-so blew up, but my units are making money, or different things like that. So any of my guys that did, I've been kind of pushing the short time spread for a while. That continues to be an awesome trade. So
yeah, that long gamma's working out right about now.
Yeah, it's looking. I still looks great. I'd throw on a time spread right now. I will buy August S&P and sell September S&P as much as you want. I'll do that all day, every day. And I'll actually do the SEPAC too. Right now, the vol is just crazy high, and you want the gamma and you don't want the vol. So be short that preem.
Live the dream. How about, we were talking last show about what seemed at the time to be extraordinary levels of upside love in the VIX. Not looking as extraordinary now. Some of those people are looking somewhat prescient, paying up for those 43 and 44 calls in the upside. I know you were, I think you were laughing as you were hitting their bids. Have you rolled those up at all?
Yeah, no, I mean, it's really nutty, the types of trades that are developing. You know, I would argue that down 80 on the day was some sort of capitulation, and at least from the hedge funds. I heard about a lot of hedge funds going to cash, and this kind of VIX movement, you know, makes you wonder whether we got there. Although, you know, I think we were up more on Thursday, weren't we, in the VIX, or close?
It's about 50% exactly. The VIX cash closed up today. Closed up 16 points.
Oh my gosh! All right, so I would call that capitulation. I think we're there.
I think so. Yeah, I think this is a substantial upside. I think you can call that. Of course, this raises the question, too. I mean, looking at the names today, and I was having this chat with Uncle Mike a little earlier about whether or not we're starting to throw the babies out with the bathwater here, looking at all these names crushed across the board, 5%, 8%, 10%, LinkedIn down nearly 18%, Apple down 20 handles. It's funny, I was actually joking with Uncle Mike. One of the names, end of last week, I was just going through and looking at any positions that had some short exposure and seeing what to do with some short downside here, short downside there. One of the names I actually ended up closing out a short position on the downside was Motorola, MMI. And ironically, that's one name that in the sea of blood we had today and the 500-point down day back on Thursday, it was one of the only green names. And today it finally gave up the ghost towards the end of the day. But through the middle of the session, it was still green. I don't know what magic MMI has, but it's been resisting the.
This was just insane. Here's the humor here, okay? So U.S. Treasuries get downgraded by S&P, correct? So then, what do traders do? They sell S&Ps, correct? They sell S&P named equities, right?
That tends to be the case.
Then they take the proceeds from that sale of the S&P 500, and what do they do with it?
Gobble up T-bills.
They put it in product that S&P just downgraded? So explain that to me.
I'm having a hard time explaining a lot of the things we saw going on today.
I don't get it. I mean, I'm looking at treasuries, and, I mean, the yields here are insane. I don't know why anybody would ever want to own a treasury right now. And, you know, we just got downgraded. We're sitting at flash crash levels now. Yields are almost to those 08 levels. You know, you explain to me, all right, somebody please explain to me how in the world that dimension of what happened today makes sense.
Yeah, you know, I've been saying for a while now that bonds elude me in terms of the paper flow out there and what customers are doing. And, I mean, certain amount of it you can explain away as just a flight to any sort of quote-unquote safety. But at this point, I think it's gone beyond that, and it's just
this is nuts.
I don't know who is driving this paper. Maybe there's some mandate in some of these large funds that X% down, they have to move into treasuries or they have to reallocate or whatever. I'm not sure what is driving this, but there is a massive flight. I mean, God, wasn't Tony was slamming bonds, you know, on our live show a few weeks ago, saying, you know, it was a screaming sale. Everyone thought the same, and it's been a long time since, and still everyone and their mother just piling into bonds. Not surprisingly, Uncle Mike was kind of happy today. Metals only green today in a sea of red. If you've been watching any of these other names out here, LinkedIn down 18% today, crushed, down about 25 handles since last week.
I mean, so wait a minute. So because the U.S. stock market got downgraded, people are going to stop using LinkedIn?
Apparently, that's the logic. I guess people are going to stop networking. You think this would actually be boom times for them? People are getting laid off. They'll need to look for jobs. There you go.
Yeah. I mean, but I just don't see it. I don't think a lot of what happened today. This is when we start getting into the concept of market psychology more than market matters. Because believe it or not, I actually don't mind you could make an argument to me that the S&P belongs at 1100. The speed at which it's getting there, maybe not. Some of the other things, maybe not. But, it could totally be there. But the reasons that it's getting down there, I think, are a little bananas, if you ask me.
Yeah, you and I have been on the bearish tip for quite a while. I don't think either of us expected it to happen in about 2 days. But
No, and the crazy thing is people are looking at that VIX saying 48. We could be at 32 by Friday.
Yeah, that's what the reporters were calling us all day, asking what does this mean? Where are people positioning? And it's crazy. We saw so much last week of people, everyone and their mother, saying VIX is going to sell off after the debt debacle. Of course, that didn't happen. Economic numbers helped that go the other direction. Then, of course, Thursday's sell-off sent the VIX shooting in the other direction. And then today, again. By the way, that hedge looking. I bet you're a pretty happy man that you hedged that short VIX.
Yeah, no kidding.
That is saving your bacon right about now.
Yeah, well, I'm actually going to flip out of it tomorrow.
Flip out of the hedge?
Yeah, I'm probably going to roll into something like that.
Are you keeping the downside? Of course, your downside is way down now. It's like 20 level, right?
Oh, that's gone. So, I mean, that's lost. I've already collected almost everything I'm going to get out of that VIX unless I wait till expiration. Because the VIX futures are still at what, 34, 35? Where'd they close? Not at 40, I can tell you that much.
No.
36,
yeah. So,
I don't see the VIX futures getting much higher than here, and I don't see how we don't get a nice little. They're pricing like there's a reprieve coming.
Not surprisingly, a lot of activity in our favorite SDS, the ultra short ETF, and in the options on SDS, and we saw a ton of upside call sellers on SDS. So there are a lot of people thinking the same, that this is a lot of maybe not much ado about nothing, but perhaps the high end of what we're seeing for VIX. 50%.
I mean, we've given up. We're now beyond the flash crash sell off, and basically, unless you think we're in 2008, we're done. We're getting near done, right?
You'd think, yeah. I mean, I'm looking here, and we saw the big activity in the SDS was the AUG 30s. They sold 45,000 of those. This is the twice short ETF. Previous open interest was 1,600 contracts, so a lot
makes a ton of sense.
A lot of
right?
call sellers diving in. AUG 31, same thing.
I actually think if you want to get long this market, I still think the smart money goes to XIV. Don't you? It's got you've got the time horizon, something that's going to really take advantage of the futures flipping. So as that front month flips down, the XIV is going to do really well. I just think that's where I'd be going if I wanted to get long.
You're not going to play in your favorite, the VXX?
No, I mean that's the other one. The VXX is if you want to play options. And I was doing some of that. The XIV is if you don't know the time frame. I don't know. I mean, where do you think it's certainly scary out there right now. There's a lot of people shaking in their boots. Mark, where was during kind of the, not 08, but how long can these things stay in backwardation? You recall VIX futures were only backwardated front month to second month for about 24 days or so when during even the crash of 08.
Yeah, it didn't take that long for it to the crazy part, at least, of it to unwind itself. It was a bit of a I guess you can call it an upside spike, and then it kind of just trailed. I wouldn't say gently, but it trailed off towards the other end. But yeah, we're seeing today. I'm looking at the 2-year chart on VIX right now, and we're actually. Yeah, we're hitting this is exact flash crash levels. We spiked up to about 48 or so around that time, and we hit just about 48 again today. And within about a month, so it took a while, but about a month it was sold off back down to about 25. Yeah.
Yeah, I mean, so those of you holding VXX September positions. You may still have a shot here. There's a reason why your 24 puts are still worth a lot of money. Those of you holding August may not happen.
Yeah, time to roll a little bit longer time frame. Of course, it's ironic. I was having a meeting today over lunch, and I had looked at my the numbers before I went in. And the Dow was down about 300, and then I was doing something, and a few minutes later I checked again, and it's down 5 something. I said, "Oh, I wonder what happened." And then someone said, "Oh, Obama just started talking." And I was like, "Oh God, that guy just crushed it today." We're a AAA nation. Apparently, the market didn't agree, and the fact that we closed pushing new lows towards the end of the day, not exactly a good sign for tomorrow. Did you watch any of these individual names that are lighting up the tape today, like Ford and RIM, any of these others?
Everything's lighting up the tape. I mean, did you see anything crazy bullish?
Not crazy bullish. We saw people flipping we saw some sizable downside activity in RIM, some guy buying about almost 50,000 puts. Jan 21 puts. That's pretty sizable for RIM.
That's a tough decision. Hey, the market's crashing, and I can buy puts on a really crappy company.
He was rolling. He was rolling from last week. He rolled from Wednesday, and he bought the 24 puts for about 35,000 of those, and that worked out pretty well. So he rolled down to 50,000 of the Jan 21s now, and he's putting his money where his mouth is, putting the house's money to work on the table there. 50,000. This is a relatively, I agree, RIM's weak, but this is still a historic low for this company to be putting 50,000 puts on the 21 line. Intriguing nonetheless. We mentioned, of course, the upside call activity in SDS. This is a double short ETF. We saw 10,000 of the AUG 31s getting sold. We saw AUG 32s and 33s, 6,000 or 23,000 and 6,000 respectively of those. AUG 29s were active as well. So a lot of activity in this double short ETF and the options on it. I tend to avoid these ratio ETFs. I'm not a huge fan of them.
You know what's an actually interesting ETF? If you're afraid of vol but want to trade the term structure, look at XVIX. You know, it's basically short front month futures and then overweighted in the back month to cover the Vega. But, you know, it's really a term structure trade. And that actually might really make some sense right now.
That's an interesting trade, I agree, because it gives you a little bit more of the term structure flavor in that one. All right, and that's going to do it for this extended trading block. And now we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. Of course, there's pretty much only one thing around the block today that I think anyone in their right mind is focusing on. And that, of course, is will the sell-off continue tomorrow or will it abate? Has the bloodletting ended? Given the fact that we were pushing new lows towards the close, I'm not exactly optimistic that tomorrow will be the rebound day that a lot of people I think were hoping for. People were hoping midday today that the rebound was coming once Moody's reiterated their AAA rating, but that only seemed to stave off the worst for a few hours. Then we were pushing new lows again.
Well, you've got the Fed meeting.
Oh, yeah, but they're so powerful.
Well, I don't know. Who knows?
Good old Fed, the Fed meeting, they've been kind of impotent for a long time. Now that the debt ceiling is in place, is there even a possibility of a QE3? Where would this money come from? And wouldn't that just lead to more downgrades if they did that?
I don't know. I think that actually opens the door. Now they don't have to worry about S&P. And I think Fitch and Moody's aren't going to do anything. I think S&P was pretty ballsy because I think they're full of crap, to be honest.
Well, whenever you get into adding the political spectrum into something that's supposed to be a fundamental economic equation, it gets a little subjective. Right,
and what they were in, I don't want to get into it, but I think it's a little hilarious that, as I think I said this on my Twitter, the day the French are more creditworthy than the United States is the day they're also better than the Germans at war.
Well, the French were defending us. The French finance minister was coming out saying S&P is insane, and he was going on about that quote-unquote $2 trillion error as well. Even the French were saying the S&P was a little bit overzealous.
I know. The day that we're less creditworthy than Great Britain is the day the British have better teeth than Americans.
Well, you know, on the one hand, I kind of agree with all the people out there who are saying, well, they should only look at pure economics to make this decision and pure math. But on the other hand, there is no math for some of this stuff, like the political element, you know, which is the driving element for a lot of these things.
Well, the fact is you can say what you want about the politics, but for the first time they actually cut debt. You would think that that would actually calm them down, not make them angry.
Yes, you know, it is interesting that they didn't take that into account. Of course, the question is, you know, if they did, let's say they did do a QE3, would that then just signal Moody and Fitch that they had to? Because that spending, that couldn't help our credit rating. So it'd be ironic.
It's not really even spending. I mean, it's just buying our own treasuries.
That's true, but still.
At these rates, it's not like they're really paying anything. There's no debt there.
It's free money.
I mean, really, that's all they've been doing is printing money.
Printing free money. So that would be the height of irony if they came out with a QE3 as a way to stem the bloodletting, and then because of that, Fitch and Moody's joined the downgrade path, and the bloodletting got 3 times worse.
Mm-hmm. Yeah, I mean, it's insane.
So obviously, FOMC tomorrow, I don't think anyone expects any sort of movement there.
By the way, I saw Alan Greenspan on Meet the Press. It's interesting that they still have him on, and this is his mess in a lot of ways.
Yeah, anyone who's been active for the last 15, 20 years in government deserves some hand in this debacle, and he certainly was at the tiller for a lot of the ebullience of the 90s, let's say.
Yeah. So, Mark, you know, we're trading 48, although VIX futures are at like 36. What do you think about buying the VIX 30 to 40 call spread for about $3.50? What do you think? Might make some sense.
The 32.40. You talking AUG?
Yeah, I'm talking August.
That would be good. Of course, you're rolling out of your what's that spread you had before that you had the upside call spread on?
I had a 30-32 for 20 cents.
Yeah. So you can roll that up and.
It went out the interesting thing is it only went out worth about $1.40. Just a 700% return there.
Why don't you look at the let's look at some VIX. I'm getting some weird quotes.
No, VIX has some decent quotes. I'm looking at fine. So think about this: we could sell the 50s. The 50s have the highest vol. So what about selling the 50s 3 times and buying the 30s once?
Oh, doing it on the call side? I was thinking you sell the 50s to finance your downside 30-25 put spread. There we go. If you think it's going to turn back to the dark side, or you think we still have some more upside to go?
No, I think we're going to turn around. But the VIX futures, VIX has to fall about 7 points before we get maybe a point of movement out of the VIX futures, I would think.
Yeah, there's some flux there.
Well, I mean, the end of day stuff was just insane. And that actually, you know, you say, oh, we were selling at the close. I actually like selling at the close. I think that is the sign of true capitulation, is everybody rushing to unload.
Yeah, everyone was looking for that bump. When it didn't happen, everyone said, that's it, I'm out.
Right. And, you know, my thoughts are tomorrow we're down on the open, but we might get a pop. Of course, I thought we were 50-50 up on the day-to-day. And it actually looked that way for a little while, you know.
Yeah, for a while there when it started to turn, I said, okay, here. I mean, they had the whole weekend to digest it. It's not like this was unanticipated news by any means. You know, we talked about this months ago.
Somebody, you know, some hedge funds must just hit the trigger and said, enough is enough. I want these MRFing snakes off this MRFing plane.
You know, speaking of which, I was talking to some reporters today, and they were asking me about the sell-off last week on Thursday as well, and they were kind of wondering what drove that, and if indeed some of these hedge funds had advanced news of this downgrade, and they were diving in size on Thursday, because it supposedly started leaking out around Friday, but of course they met with the Treasury guys earlier than that, S&P, and we all know how reliable those Treasury staffers are. Whenever I hear about Treasury moves, I always think back to the day when I was still in the S and Robert Rubin resigned. He resigned on the trading day because that was his big FU to the market, I suppose. And I remember the pit opened, and within a few minutes, every phone in the place was lighting up for downside puts. And I remember scratching my chin saying, wow, this is odd. And the time for that to happen, they lifted off, they picked off everybody in the pit, and then the news came out, the market dropped about 20 handles.
By the way, how about that firm that Goldman threw under the bus that was long like a million Vega?
Yeah, I did.
You know, how about that? You think those guys wish they'd held on a week?
Well, it's more Goldman. You know, I expect nothing less from a Goldman at this point.
Insane. So By the way, I'm hearing breaking news from Reuters that the Senate Banking Committee is probing S&P's downgrade of the U.S. credit rating.
That is fantastic. Whoa. Bring that. Wow. I don't know what to say to that. How do you respond to that? So what, we're going to investigate the quote-unquote independent ratings agencies now? That, I mean, obviously they have some market power and, you know, they're, I don't know. That leaves a bad taste in my mouth, I think, that one. Is government enforcement the way to fix that?
I think if it's the Senate, it's the Democrats.
Yeah, that's insane.
It's hilarious. Now,
that's populist nonsense. You know, drag them in front of us, make them do the dog and pony show.
I know, but you know, the truth of the matter is that this clearly doesn't matter because the only thing that was up is what they downgraded.
Everyone's rushing to buy it. Yeah, they crush flight to quote-unquote quality, the downgraded quality.
Exactly. So it just shows you how ridiculous the S&P was.
Well, I think it's a good time to stay preparing for perhaps some downside in the VIX, but or maybe some extended upside first, and then we'll start the long, slow sell-off.
I mean, we could get to 60. It could get to 80. Who knows?
With this today's kind of pops like today, I think definitely. I'm not exactly running to hit that upside skew like we were talking about on Thursday. But on the flip side, I think maybe positioning for some slow sell-off, like we saw after the flash crash, took about a month to get back down to the mid-20 levels. Maybe if you prepare on that time frame, it might be a little bit smarter than preparing for some instant sell-off in the VIX tomorrow, which could of course happen. But I think you prepare for a little bit longer time frame, stay in the SEP realm, where you know you have enough time to play. And I think, too, you start picking up some of these names that have been just, you know, we'll wait till tomorrow. If we're down more tomorrow, you wait, obviously. But if we start to turn...
Well, there's some... You know what trade I really like? Take a look at this, Mark. You'll love this. We can do the March VXX, and, you know I have not advised, but I've worked with clients that have a similar trade on. You could do like the 35, 45, 1x2, collect a huge credit. You save up to about 65. If you want, you can go out and spend a couple of bucks and buy the 22 puts for, you know, $2.
These markets are so wide you can drive a truck through them, but you can get a decent credit if you work it on that one. And then put a little downside on, because we all know how important it is to have a hedge in this market. I guess if you buy the puts, you can probably do that all for even money, I would think.
Mm-hmm. Absolutely.
There you go, listeners. Not a bad one as well. And that's March. That's certainly enough time frame by March, I would think, for...
we'll be back to normal by then. You know, certainly more relaxed than we are now.
I said, and also start looking to pick some nuanced names out of the crowd here. Names like, you know, that should be doing well, like exchanges and others that will benefit from high activity days. Maybe you start looking for good levels and you start picking these up. Vol is obviously spiking.
Yeah, I mean, what about SIBO? SIBO should be making a killing.
SIBO is making a kill. I mean, their ADV's been up. Their VIX has been up.
SIBO is down $1.12 today. Vol is up at 47%. Hey, you know what I'm going to do? I'm going to sell the SEP 21 puts at $1. How about that?
Yeah, you can sell those at $1. You can even go AUG 50 cents for the AUGs with a few weeks left. I mean, and then 21 level in the stock is relatively low. I think they've dropped to around 19, but this is, you know, relatively historic lows. At a certain point, CME has to scoop them up. So you have a built-in floor in SIBO, probably in the high teens somewhere. So yeah, I mean, AUG 21s. If you're worried, you can sell the 21-20 put spread to get some downside on that. If you're really worried about downside, or the SEPs for a nice juicy $1. And put that in the bank and own SIBO stock for $20. Not bad, sir. Well, I'm glad you could make it on the show today. Everyone else had to flee, but
we're really the interesting ones anyway. If you ask anybody,
we are indeed the sexy ones. I'll give us that. All right. But before we go, Mr. Sebastian, what is coming up over at Option Pit that you'd like to let our listeners know about? Maybe some good defensive plays coming up or anything along those lines you can tell people about?
You know, this volatility course that I'm teaching. Next week, I'm doing a presentation with Russell Rhodes immediately following the recording of our podcast on how to trade the VIX. And it's going to be free through the SIBO. It's just going to be a little, he and I are going to team up on kind of best trades of the year. We're going to talk about kind of the year in review. And then we're doing a how to trade the VIX course September 10th. And then starting the 12th, I'm doing a weekly vol series where I'm going to get into all the different volatility products and really break up down how to trade volatility over over four sessions and a review.
There you go, listeners. Timely stuff if you want to talk about VIX and the various offshoots, VXX and the XVIX and all these other fun ratio ETFs and ETNs that exist in and around the VIX universe. And by all means, surf on over to optionpit.com and check out one of Mark's courses. I think you will get something out of it. All right, that's going to do it for this episode of the Option Block, and I hope all of our listeners out there are trading intelligently and keeping their powder dry and indeed put on their downside hedges when we warned you to a few weeks ago, or not a month ago. And hopefully you survived to hear the next episode of the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.